Welcome back. Dipen Mehta is joining us, Director at Elixir Equities, to make sense of what's happening, all that's happening in the market. Dipen, good morning. Thanks for joining us. I wanted your thoughts first on Tata Steel. That had a big rally on Friday and there was big delivery volume as well. There's been an upgrade as well this morning. Do you think this is still a good time to participate in this steel rally?
Good morning, Anuj, and thanks for having me. No, I don't think so. I think the best period for metal stocks is now behind them. And no doubt, I think they will report excellent numbers next 2-3 quarters on account of increased realization. But going forward, there's going to be resistance as far as increasing further prices, and cost increases are anyway coming into play for a lot of the metal companies. And typically, we would like to buy steel, aluminium when they are at the bottom of the cycle from a long-term investment perspective. And these stocks are no longer trading at the bottom of the cycle. So you could have a further trading rally, maybe 10-15% more or so. But whether investors should participate in it is a big question mark. And from following these stocks over the last decades or so, it's extremely difficult to invest in them. Although if you have a good trading attitude, you can certainly make some money when they're going up or down.
Okay. Good morning, Dipen. Thank you very much for being with us and for your patience. I want your view on financials. I'm looking at it on a day-to-day basis, and there is some positivity coming from bond markets because bond yields in India have fallen. We just had news that Indian bond yields could be included in a FTSE index, a FTSE index, which will be good news as and when it happens. It's just under consideration. So all told, and then this Bhushan Power getting resolved, I'm seeing a lot of positive news over the last few days. But you tell us, which ones are you buying, if at all?
Yeah, good morning. I think you hit the nail on the head, and clearly PSU banks are going to be big beneficiaries of such NPA resolutions as and when they do take place, and most of it will flow to the bottom line. So when the quarterly numbers are disclosed, you could have a spike in profit, maybe one-time nature, but nonetheless, I think it does excite a lot of investors and traders. I think the next 12 months would be the golden period as far as PSU banks are concerned in terms of stock price returns. They may deliver appreciation even higher than their private sector peer group. So very positive on PSU banks. And within the financials, I think one trend which may become quite interesting is the microfinance companies. And I think it was pointed out this time that in the elections in Assam and West Bengal, no party has in their message said that they would like to write off loans. And that's a big change from earlier elections. And if that actually does take place and there is no waiver of loans of any kind, then certainly it's very positive news for microfinance companies because elections usually has a big risk factor for such companies. So keeping that in mind, I think Bandhan Bank would be the biggest beneficiary. In any case, growth rates have been well above the industry growth rates. It's only that they have a concentration issue as far as Assam, West Bengal is concerned. And if overall recoveries are picking up well over there, then you could see lower credit costs coming to the Bandhan Bank, and that may benefit the company and give a good appreciation stock price as well over the next 6 to 12 months.
Okay, that's on Bandhan Bank and those banks in general. Dipen, good morning. Today we have the Nazara Tech listing that happens. For those who perhaps did not get allotment, would you recommend buying post-listing gains for the long term?
Yeah, good morning, Sonia. Yes, absolutely. I think first the disclosure that we and our clients are looking to invest in the company, and we have had some small IPO allocation as well. I think it's a unique company, and typically I think one of the kind of concept stocks do get traded at extremely rich valuation. We have seen that pattern play out several times in the past, and I think Nazara will be no different. Good pedigree, great track record, and if you want to play this very exciting investment theme of gaming and increase the time and money spent on gaming and related apps, then Nazara is the only application or the only stock which is available for you to bet on at this point of time. I don't know what price it will list at, but I think if you assume a 60-70% premium, even at those prices, one could look at investing. But then you need to have a 3 to 5 year type of a view because you are buying a stock which is on paper quite expensive, and you're just hoping that the growth rates will justify the kind of rich valuation. So one needs to be a bit careful and have a slightly longer term view. I think 60-70% appreciation to around 1600 could be a good price point to enter the stock.
Okay. Do stay on, Dipen. We have to take a break. We will have our technical experts also joining in, Sudarshan Sukhani and Rahul Mohinder. Back in a jiffy.
Welcome back. Well, it looks like we are in for a good start. This is, of course, after Friday's rally, 14,769 on the SGX Nifty, which is a good 100 points higher than the last close of the Nifty futures on Friday. Remember, we were not trading on the holy day. Sudarshan Sukhani and Rahul Mandar joining us for Market Technicals. Gentlemen, good morning. Sudarshan, has the market texture changed once again, or could this be a bit of a trap rally? What's your view on the index now?
Good morning, Anuj. I wouldn't call it a trap rally. See, after a big decline, markets normally have a bounce back, especially because we are in a long-term bull market. So a dip is usually an opportunity for either profit taking or seeing some casual buying or even investment buying. So to that extent, this rally is genuine. But the broader short-term trend of the market is on the downside. If you see, we are making lower highs, lower lows, and much more so in the bank nifty. It's very difficult to imagine the nifty going up without the bank nifty, and the bank nifty is showing signs of much deeper declines eventually. So this is a relief rally and it should be treated as such. There is significant resistance coming around 14,800 in the nifty, and depending on where we open, there is some intraday say positions on the long side which are possible, but keep it intraday. Remember the resistance 14,800 and keep a 100-point stop. That's for the nifty today. The bank nifty is not even a buying opportunity. Around 34,500, if it does rally to that level, it's actually a short sell. Buy bank nifty puts if you see a significant rally there.
Okay, so let's see. I mean, the rally is genuine. You still want to buy this perhaps. Rahul, good morning. What's your call on the index?
I think, I would say that the market's going to be a bit sideways. My whole sense is that we are definitely in a bit of a range. It's definitely not something which is looking exceptionally down or something. Even on the bank nifty, I think we'll have a hurdle of around 34,400. That's the level I'm going to watch. Thereafter, there's 36,600. So, there are hurdles down the way, but in essence, medium to long-term charts haven't really broken down. We're still steady and stable. Again, I don't expect a remarkable upsurge as such, but broadly, if you're stock specific, there's a lot of opportunity. And even when I look at the Nifty spot, and again, these levels are on the spot, today, what I'm going to watch is, can we really get to a level of 14,700, 14,750? That's the belt of resistance. I know we're likely to probably open very high up, closer to those levels, but can we sustain a level of 14,750 or not? That's an important marker for me. And if I was a medium to long-term player, the next big trigger, in my opinion, is, can we close past last week's high? And last week's high was around 14,878 on the Nifty spot. That will be a lovely reference point for us to get that confidence that we're once again moving towards 15,400 and higher.
Okay. Let's before we discuss stocks, Sudarshan, I'll just revisit the bank nifty view. Did you say that you'll buy puts on the rally, or would you buy the index?
No, I did say we'll go short in the bank nifty if we see a reasonable rally towards 34,500.
Okay.
Rather than go and sell futures, we would buy puts to take that short position. So you heard it right. Okay. The bank nifty is still a short sell.
Okay, bank nifty is a short sell. So in terms of stocks then, Sudarshan, what are you buying and selling?
Well, after this big gap up which we are expecting, there's nothing to buy really. But for whatever it is worth, buy Vedant and buy Mindtree. At least for Mindtree, you can keep it a slightly longer term position, and the stock has a rally and is likely to see higher levels in the next few weeks. Vedant is a short term buy. Sometimes metals can do strange things on the upside. Indigo is a short sell. Look at the charts. It's breaking down. It's in a trading range for the last 6 months and is now at the lower end of that range. And PVR has already broken down. That's an intraday short. PVR is looking for much lower levels.
Okay, PVR is a short sell. In fact, for all these cinema stocks, the rally has really punctured ever since the case is picked up in Mumbai, which is where the bulk of the revenue really comes in for the cinema companies. Rahul, what are your calls?
I'm going to go with 3 buy calls. And mind you, these buys are not just intraday calls. It's more about these stocks being medium to long-term solid. And again, I'm using these breakouts as continued opportunities. Cipla, after its correction, I think is once again likely to move higher. So 830 is my target on Cipla. I'd buy the stock with a stop loss at 765. Tata Steel, I think, continues to outperform despite the worry of it being very overpriced, etc. But I think from a technical standpoint, enough signals that point that the stock is at least heading near term to 810 levels. We're looking at a stop loss of 748 when buying Tata Steel. And finally, IDBI is showing me a good medium to long term pattern, and I'd buy the stock for a target of 43 rupees with a stop loss below 35.
Okay. I'm sure listeners will be very happy with the PSU stock inclusion. That's where people are expecting to make a fast buck. Thanks, gentlemen. We will come back to you. Let's invite Shubham Agarwal, the CEO and Head of Research at QuantSap Advisory, for some F&O strategies. Good morning, Shubham. Thank you very much. What are you trading today?
Hi, good morning, Lata. So after the rebound that we have seen on the indices last week, looks like that the pullback that we were witnessing on the index is now complete, and we might see a rebound happening overall for at least a few days to come. So with that, I have a all buy list today. The first one being a buy call on SDFC Bank. And if you look at the banking space, on the last trading day, we saw additions on the derivative data in many of the large cap banks, and SDFC Bank was one of them. So a breakout has happened, and looks like that we might see some follow buying coming in there. So 1540 strike call option can be bought for a target of 44 rupees with a stop loss at 25. The second buy call is on Divi's Lab. And if you look at many of the large cap pharma names, most of them looks to be forming a spike, which is a kind of a medium term bottom. And Divi's Lab has been consolidating for the last 2-3 trading sessions, and look like that today we might see a breakout happening there. So a 3600 strike call option can be bought for a target of 100 with a stop loss at 58. And lastly, a buy call on McDowell's, where the stock has been underperforming for quite some time. But if you look at the recent behavior, the stock rebounded from a very important support, and it's forming a continuation pattern from which a breakout is expected. So 560 strike call option can be bought for a target of 25 rupees with a stop loss at 30.
Okay, thanks, Shubham. Have a great trading day. We have to take a break, and we're going to come back. We'll have pre-opening rates. We're also going to talk about Minda Industries' expansion plans with Sunil Bora, the Executive Director and Group CFO. And very important, global cues being what they are. We have an expert joining us, Dan Feynman, Co-Head of Equity Strategy Asia Pacific at Credit Suisse.
Welcome back. As promised, we're going to talk about a couple of developing stories. Minda Industries has approved a massive expansion plan in 2 of their plants. So they will be expanding their 4-wheel lighting business and their 4-wheel alloy wheel business because of an improving demand situation. We have the management joining us now. Sunil Bora, who's the Executive Director and Group CFO at Minda Industries, joins in. Sunil, tell us a little bit about when this capacity expansion comes on stream. How much of it will be through debt, how much through internal accruals, and what will the eventual capacity look like?
Yeah, good morning, Sonia. So in terms of the capex for these 2 plants, which you just announced on the board has approved on Saturday, one is the Lightning 4-wheel plant, and another is the expansion in our existing 4-wheel alloy wheel plant in Bawal in Haryana. So in Bawal in Haryana, we will expand our capacity from 120,000 wheels a month to 180,000 wheels a month. So that's a brownfield expansion within the existing premises. And the second one, which is the Lightning plant, is a greenfield plant in Gujarat. So both these plants are expected to start the commissioning activities sometime in the last week of 21-22, and maybe a quarter thereafter for stabilization and all. So that's the broad plan, Sonia.
Okay, Sunil, are you very confident of the demand side? I mean, there are metal price increases which OEMs, which manufacturers are finding it difficult to pass on. You're so sure of the demand?
Yeah, absolutely, Lata. So if you see the first business, which is the alloy wheel business, we are already running little beyond capacity, and we need to expand to make sure that we have a surplus capacity available, plus based on the additional orders which we have got. So definitely we need this expansion to happen. And also there is a lot of positive momentum in our aftermarket sales, which is through the OEM SPD and also our direct aftermarket channel. So the demand in the alloy wheel segment remains very robust. And the other expansion, which is the lighting plant, as we I think also discussed in past, we have been actually currently our annual sales is roughly around 400 odd crores in that business, and the new orders which we have got is almost like more than 200 crores a year. And definitely we will need to expand our capacity to make that additional order. So it is not only about the conviction of the future demand, but this is also linked with the orders which we have already received, and we have to sort of start supplying sometime in 22-23. So that is a broad reason why we will need to expand these capacities in these businesses.
You said you've received new orders worth 200 crores in the lighting segment. Can you tell us which are the OEMs that are giving you these fresh orders?
Yeah, so normally these are our existing customers. There are no new customers. So these are mostly our Japanese customers whom we currently service. And these are the businesses which we have got primarily into the LED lighting segment. So if you remember, we have acquired a company called Delvis in Germany around a year and a half back. So that fills our void of technology edge. And once we have had that, I think there has been very good traction with our customers, and we have been successful in getting these new orders.
Okay. It's 90 crore, you said, entirely internal accruals?
Yeah, it's broadly, I would say, internal accruals. There may be a mix of little bit of that, but broadly it will be funded in both the plants from internal accruals.
And it won't disturb your margins? I think you all did 14% in Q3.
Yeah, so Q3 we did 14%, Lata, but we all know that there have been some tailwinds in Q3, and there were definitely some benefit of the cost pressures, cost reductions which we have done, and the commodity impact definitely goes hit you more in Q4. Plus, also going forward, we know that we have acquired a company called Harita Seating Systems.
Yes.
The merger has been approved by both the NCLPs, and there our margins are single digit, almost 9% or so. That will be little dilutive of margin on an overall basis, but yeah, broadly we are in the range of around 13%.
All right. Thank you, Sunil, for joining us with a quick take on your expansions. It's good to hear expansions, right? Thanks a lot for joining us. Let's quickly run you through the past financials. You'll have the revenue picture bar chart for the past 5 years coming up. Of course, everybody had a tough FY20 with all those new rules for automobiles. And of course, they're going to do better in the current year. And then you'll have the EBITDA trend and the PAT on your screen. Okay. Well, with that, let's invite someone who we have been waiting to hear. Dan Feynman, the co-head of Equity Strategy Asia Pacific at Credit Suisse, is joining us. Good morning, Dan. Thank you very much for joining us this morning. Well, first up, want to ask you if Arch egos, have we heard the last? Or, this repeated shocks. First it was GameStop, then Arch egos. Are we going to be remaining vulnerable to these sudden booby traps?
That's hard to say, but these booby traps haven't been really tremendously disruptive for markets. They cause some short-term hiccups, but it really hasn't changed the underlying dynamics of the market. What's really driving markets on a longer-term view or even on a, say, 1 month view is going to be the vaccine rollout, the stimulus, global growth. And I think that all of the rest that's been grabbing the headlines is a bit of a sideshow.
Dan, good morning. We had a big rally in India where the Indian market outperformed a lot of emerging market peers. But is this second wave of COVID, especially in big state like Maharashtra, threatening this rally? What's your view?
It's certainly an issue that investors need to be monitoring, and we are watching it pretty carefully. But I think that the infections and the increased caseload in India is of less concern than, say, it might be in some other places, say in Europe or the US. The reason being that because the fatality rate is so low in India, Indians haven't altered their basic consumption patterns and behavior as much as consumers in the more developed markets have. So yes, it's something that we're concerned about, but I don't think that it will necessarily derail a market rally based on strong fundamentals.
Okay, Dan, hi, good morning. I was going through your last report, and in that you mentioned that small caps have more legs to run, not just in the Indian markets, but many other markets globally. And within small caps in India, there are certain pockets like, say, tractors that you like, especially names like Escorts. Can you just take us through your rationale on why investors should, put more money in this small and mid-cap space?
It's basically about two considerations. First of all is the economic cycle. Small caps tend to be higher beta, meaning that they're more volatile. They have weaker balance sheets. They have less diversified revenue streams. That means that in tough times, they tend to underperform. But when you're in an economic recovery phase like we are right now, small caps tend to do better than large caps. That's factor number one. The second factor is that if we look at valuations, small caps are trading at quite attractive multiples relative to their larger peers. So we've had a small cap outperformance basically since global markets bottomed a year ago, but I think that that's got quite a bit more to run given where valuations sit and given that we've got a lot more runway ahead of us for an economic recovery.
Okay. Dan, would Indian valuations generally worry you? Of course, there are pockets of undervaluation, as you point out, small caps and some mid caps, but overall at an index level, are you comfortable with the valuations?
I'm comfortable with Indian valuations at present. If we look at India relative to other markets, it is expensive on some metrics, but it's always been expensive. And that's because you've got superior growth on a long-term and even on a short-term basis in India. Investors are willing to pay for that superior growth.
Okay, Dan, of course, the other concern for the market has been the bond yields in the US. And once again inching up a bit, the dollar index as well moving higher. Do you think that could impact the foreign fund flows, especially in markets like India?
Definitely. And this is why a couple of weeks ago we made a tactical downgrade of emerging markets globally. We're worried that the dollar will remain strong in the second quarter on a temporary basis. Longer term, we think the dollar will weaken, but second quarter we think will be a strong period for the dollar. Also, we think that interest rates have a bit more room to rise in the second quarter. That also will be negative for emerging markets in general and typically is a bit tougher on India than other places. That said, we do think that the period of dollar strength will not persist much beyond the second quarter. The U.S. is running a huge and growing current account deficit that will eventually place downward pressure on the dollar, and interest rates as well. While they do have a bit more to rise, eventually we think that the Fed will step in and cap the rise in real rates with strengthened forward guidance. And once we get there, that's when emerging markets start to do better, regain their poise, and a place like India, which typically is more sensitive to these issues, then you'll see an even stronger bounce in India.
So would you invest afresh in India now? And what would the call be, particularly on the Indian markets for the rest of the year? What kind of upside or downside are you looking at?
Well, I think that we can get double-digit upside in India pretty easily between now and the end of the year. You've got very strong EPS growth, which is the second year running that India has actually done better on EPS than most other countries in the region. As I said, India looks less vulnerable to the pandemic than it did a year ago, and I think less vulnerable now than developed markets do. And you've got an economy that in some ways is in a sweeter part of the cycle than some other places. China in particular, which had its big recovery last year and basically is already normalized as far as economic growth is concerned, whereas India has a lot more headroom before it starts to reach less exciting levels of growth.
Okay, well, Dan, finally, what are the specific sectors? I mean, I guess your specific stocks would be the India unit's problem. But do you like commodities? Like, for instance, steel companies, they're just going from strength to strength. Do you like banks within financials? Which ones? What are your sectors hierarchy?
Well, both of those would be high on our list. We do like materials stocks in general. Within Asia, these stocks tend to be very sensitive to changes in inflation rates. And as a house, we expect that inflation will be rising quite a bit globally, especially in the US, but on a global basis. That typically is very good for materials companies. But we also like Indian banks, particularly the private sector banks. As I noted before, India in a way is at a better part of the economic cycle than some other places globally and in Asia. India's credit cycle in a way bottomed back in 2017. We've been seeing credit costs falling since then. Even before the pandemic started to ease, Indian credit costs were coming down. And that's giving Indian banks very strong bottom line growth this year. So definitely you want to be positioned in banks.
Okay. Well, Dan Feynman, it's always a pleasure having you with us on this channel. Thank you very much for putting into perspective so many moving parts. Okay, that's the word from Credit Suisse. Yes, there will be danger to emerging markets because of the dollar index's rally and the rise in US yields, but largely comfortable with Indian valuations and very optimistic of the India growth story. Anuj, that's a fairly strong start.
Yeah, fairly strong start. Let's see, 120 points higher on the Nifty as of now. I think we're still to get the bank Nifty rate. We'll get that in next 30 seconds because the pre-open is yet to settle. The JSW Steel is starting 2% higher. Tata Steel, GAIL, ONGC, so the commodity stocks are doing well, of course. There's a downgrade on Hero MotoCorp, so that's it's not down by a lot. Today it looks like the market is in a full risk on mode. A couple of important mid-cap stocks, MMTC is up about 5%, and Tata Steel BSL is up about 2.7%, but 120
Clearly
points.
a steel rally. I mean, there's no taking away from that.
Absolutely. I think the steel stocks perhaps could be in for another round of rally, but let's see if this can sustain or not. The bank Nifty has settled 300 points higher in the pre-open at 33,600. Let's take the 9-10 calls and then we'll get Dipen Mehta back on. Sudarshan, if we open here, is there an index trade and what's the 9-10 call?
There is an index trade for the Nifty. You consider buying the Nifty for an intraday trade, put a stop of 100 points lower than the opening price and look for a target of 14,700 or 700 plus. The Bank Nifty continues to be a short sell and there is a confusion between the two. The Bank Nifty is a positional short, wait patiently for it to cross 34,000. If it does that, buy put options.
Okay, and 9-10 call?
Oh, I'm sorry, Mindtree is a buy with a stop at 1960 and a target of 2010.
Okay, Mindtree. Rahul, your 9-10 call?
Well, I would continue to, acknowledge that Tata Steel, the stock that I mentioned earlier, that's top on the radar. I mean, 810 is definitely a near-term target. The challenge for it to see it is 783 will be watched carefully, obviously being, the recent high that it just made. So, once it clears that, I think a lot of ease and confidence comes in. It's kind of resistance-free, if I could put it that way. From an index standpoint, as I mentioned, 14,700 to 14,750. That's my ballpark target. That's a key resistance. That's the band to watch.
Okay, well, that's on the 9-10 calls. Let's now get Dipen back on. Dipen, I wanted your thoughts on some of these power stocks where we have started to see a big rally once again. Of course, Adani Power is in a different league altogether like other Adani stocks. But what about stocks like Tata Power, Power Grid? Any stock that you like here?
Yeah, I think both Tata Power and Power Grid are interesting stories at this point of time. Tata Power, because of the restructuring underway, where it will be a lean and relatively less debt company with focus on renewables, and they are going more and more into distribution, so B2C type of business. I think that's a good move, and that ensures good cash flows and relatively low exposure to discoms, so low risk of bad debt. And Power Grid, I think, as more and more of their projects are getting commissioned, because of their fixed return which the government guarantees, you could see steady improvement in their profitability. And I think the flavor of the season is PSUs. So I think Power Grid certainly will benefit from that particular trend. So yes, I think positive on both these companies. I think next 6 to 12 months, we could see good outperformance from these two counters.
Okay. Dipen, Hero MotoCorp is the only stock in the red today, and in fact it's lost 10% this month. Now Morgan Stanley has put out a note saying that there is a risk to companies like Hero MotoCorp as the electric vehicle acceleration continues. Would you be cautious or would you buy the dip?
No, I think I'd be a bit cautious, especially in Hero MotoCorp, although we are quite positive on the two-wheeler space. But the top preference in that particular industry still remains Eicher Motors, where we feel that the premiumization trend and all the various steps the company has taken in terms of new introduction of new models and ramping up the distribution, those benefits will accrue over the next 6 to 12 months. Low base also benefits Eicher Motors. So within the two-wheeler space, typically you can buy only one or two stocks, and the preference is for Eicher Motors first and then Bajaj Auto, given the kind of fantastic track record over the last 6 to 12 quarters that the company has displayed.
Okay. Well, thank you very much, Dipen, for joining us, staying through the pre-market and giving us the benefit of your opinion. The markets look like are going to have a very strong start. Mid caps up 1%, so it is looking like a 5:1, 5 in the green for 1 in the red kind of start. Before that, let's play you some important opinion that we got over the weekend. Speaking at an event over the weekend, market veterans Rakesh Jhunjhunwala and Akash Prakash of Amansa Capital spoke about various reforms taken by the government and the impact on equity markets. Listen in.
You don't believe in your rules, the only rule is there are no rules. Okay. Please. And second thing I would like to say is that government is important for the general economic growth. If India doesn't have growth, Titan is not going to be able to sell jewelry. Titan is not being able to sell watches. Asian Paint will not be able to sell paint. So governments may not be important for specific companies, but I think they're extremely, extremely important for the general economic growth on which the prosperity of every company in this country depends. And if they do not create the ease of doing business, we could never have exported the amount of software that we're exporting. So we cannot underplay the role of government for the prosperity of every company and for every Indian. Various things like the IBC, the RERA, the GST, which has been done earlier in the last 5-7 years. Now, what the budget tells us is that the government, with its brutal majority in parliament, is absolutely sure of doing second generation reforms. And they are determined. So that time has come. I think India is now going to face the best part of the second generation of reform this country needed. Second thing is, in 91 when we did the reform, it took time for society to absorb those reforms and for those reforms to benefit the society. The real growth came 9 to 10 years later. But I think these reforms we are well prepared for, and they are going to have an immediate effect on the economy of this country.
You know, ultimately when you're buying into India, you're making a bet on the next 5-10 years of growth, if not longer. And obviously, if you don't have confidence that the government can create the conditions to deliver high growth, then that has an impact on what are your expectations for earnings for the broad market and the expectations of how companies scale up. I think that may not affect an individual company specifically so much, but even there you could argue most companies do get infected. But definitely if you're taking a view as how much you want to invest into India, which is what a global investor has to do in decide an allocation, their confidence on the government is critical.
Okay, well, we still have half a minute. So, Reema, can you quickly tell us about Nazara?
Well, it is India's first gaming company which will be listing on the bourses. Expected to be a very strong listing. The grey market premium is about 50 to 70% as we understand. The subscription was strong at 175 times and this was in pure offer for sale. Just quickly about the company, it gets its revenues from gamified early learning, which comes under the app of Kidopia. So all the mothers would know about it. It gets about 30% of its revenues from esports. They also have a very small presence in real gaming money. Why do analysts like this company so much? Well, it is the